So for those of you who don't know, I've spent well over 10 years at the time of this recording working with individuals and small businesses with their finances. I've seen and worked with the top 1% at scale, and I've also seen and worked with the bottom 20% at scale as well. And the biggest single common denominator that divides the two is financial literacy. There's a ton of other reasons, metrics, factors at play that contribute to those that are successful and those that are not. But the single biggest divider, that is the common denominator between them, is for sure financial literacy. Every time I connect with those who have good financial means, financially successful, financially stable, they have at least a reasonable to high level of financial IQ and literacy. And just about every time I connect with somebody who has horrible financial circumstances, the opposite is true. They're completely ignorant when it comes to their finances and understanding how their finances work. So this live stream is going to be a relatively deep dive into the foundation and the building blocks to financial literacy. We're going to be covering the materials that you need to learn how to develop a budget, manage your bank accounts, develop, build, or rebuild credit. We're going to be talking about debt management. We're going to be talking about investing. We're going to be talking about should you start a business, when you should start a business, at what financial point you should start a business, investment strategy, should you be focused on stocks and what capacity, real estate and what capacity. We're going to be talking about goal setting. We're going to be covering a lot in this live stream. I'm going to do my best to keep the timing reasonable for you. But at the end of the day, this live stream probably could be hours and hours long if I was to just lay it all out. I'm going to do my best to be respectful on time and try to keep this concise, but at least give you a framework and foundations around these key points to your financial literacy. So why is financial literacy so important? That's the first thing we need to get into to set context before we get into strategies and everything else. Financial literacy is going to be the difference between having all of the resources and building materials in the world and actually being able to create a structure from it. So many people who have heard the adage or have heard the example of individuals hitting the lottery, and when they hit the lottery, they're broke within a very short window of time, a couple to a few years' time. I've gone on record in a particular video and gone on in different videos and conversations to say that this is also an example, particularly for the Black community, as to why reparations, as just and ethical as it may be to distribute them, reparations would be almost useless for a large chunk of Black America. And I know that ruffles a lot of feathers and pisses a lot of people off, but the truth is the truth. It is what it is. I don't really give a damn, if you don't like it or not. It is what it is. Without financial literacy and financial education, someone can put all the resources in the world and all the tools in the world in your hands. I can assure you that you will not be able to use them effectively, and that somebody else better informed and more educated is going to be able to take it from you in a heartbeat. You're gonna give it up. As a matter of fact, they're not gonna even have to take it. You're gonna just give it up. So financial literacy is literally the foundation that makes money valuable. It literally is what makes money valuable. Money is nothing but a tool. It's an object. It's a tool. It's a tool of leverage. If you don't know how to use a tool like any other tool, all it can do is hurt you or end up gone from you. That's all it's going to do. Taken away from you, or you're going to give it away. So financial literacy is what makes money valuable. It's what makes dreams come true. It's what makes generational wealth possible. It's what makes, the moments that you share with your family in certain settings, the vacations you can take them on, the business you can pass down, the legacy, the estate planning that you can do, anything that you did, any big aspiration that you have for your loved ones, for your family, for your friends, for your community, for your city, whatever your aspirations may be. Financial literacy and financial education is the foundation, the building blocks. It's the substance that's going to allow you to take the tool that is money and turn it into something of real world value. So without financial education and financial literacy, somebody can put all the money in the world in your hands. It doesn't mean anything. You're not going to be able to do anything productive with it. And again, it will not stay with you for very long. So that out of the way, some context for you on why financial literacy is so essential, I'm going to give you, I have a bunch of notes. I have a ton of, structured layout that I want to go over. That's going to include, what is financial literacy, how to assess your financial literacy. Of course, we're going to go through a litany of strategies. And I also want to tell you where to go to give you, some context on what's available for you to start working on your financial literacy, wherever you may be. If you already have a healthy level of financial literacy, that's terrific. There's probably more you can learn. If you are somebody who knows that you are struggling or that you have a huge deficit there, then this video is going to be extra valuable for you. So I want each and one of you to tune in. For those of you who may not know, I'm JP, the founder and architect of the channel. I have really 12 plus years in financial services, 10 plus years in banking, active FINRA investment license, active life insurance license, active mortgage loan originators license, small business certified, small credit certified. So you're literally getting this information from somebody who's helping people with their finances all day long and has been doing so for quite some time. So I want you to take some notes. I want you to ask questions. If you have questions, leave comments. And of course, if you're coming into the live stream live, like the video, leave a good comment, show some love, so send some emojis up. If you're catching the replay, like the video, share the video, leave comments, support the video so this channel can continue to support you. So the first thing that we need to get into is, what is financial literacy? Financial literacy is the knowledge and understanding of financial concepts and how to apply them to make informed and effective decisions about one's personal finances. It encompasses a range of skills. This includes budgeting, debt management, saving and investing, understanding financial concepts, financial planning. All of those are crucial. If you're not doing those things or you don't have the skill set, then you absolutely need to watch this live stream from beginning to end. Why is financial literacy important? I just went over my definition of it, but let's see what some of the official perspective on it is. Financial literacy is crucial for a number of reasons. Empowers individuals, promotes financial security, reduces financial stress, facilitates informed decision-making, contributes to a stronger economy. So it's not just about you as an individual. This impacts the broader base of us that are all connected. Builds wealth and opportunities, helps avoid financial pitfalls. In essence, financial literacy is the essential life skill that equips individuals to navigate the complex financial world, make smart choices, and achieve their financial goals, leading to a greater financial well-being and a more secure future. I don't give a damn what anybody says. Money is at the root at every corner of our life. You can say what you want about the best things in life being free, and to some extent that has some truth to it. But I can assure you, you're going to have a lot of miserable experiences, and you're going to miss out on a ton of experiences if you do not have healthy financial means and resources. And in order to get, maintain, and sustain financial success and financial stability, you need financial literacy. Okay, so how does one assess their current financial literacy level? So some ways you determine your financial literacy level are going to be: do a financial checkup, review your income and expenses, analyze your debt, assess your savings, check your credit reporting score, review your investments, evaluate your insurance coverages, evaluate your understanding of financial concepts. Can you explain the relationship between inflation and purchasing power? Great question. Do you understand the basics of compound interest and how it affects savings and investments? Great question. Do you know the difference between various financial products like checking accounts, savings accounts, mutual funds, stocks, bonds? I appreciate y'all for liking as y'all come in. Another great question. Can you confidently discuss different types of debt and strategies for managing them effectively? Do you understand the significance of a credit score and how to build good credit? Are you familiar with various types of insurance needed to protect yourself and your assets? Okay, assess your budgeting skills, test your knowledge. So as you can see, if you can't, assess this information effectively and cover these financial strategies, then this means that you have a lot of work to do with your financial literacy. And that's okay. That's what this channel is for. That's what I'm here for. But it is important for you to start taking it severely seriously right now if you're not already. So where are some places that you can go or some good resources to develop your financial literacy? When you Google this or if you look this up, They're going to name places like Khan Academy. There's a few other places I haven't heard of. Coursera, Udemy, edX. A couple places that you may not have heard of that I've been aware of that I think is very fascinating and important is the FDIC, which is the Federal Deposit Insurance Corporation, which is the entity, the federal agency behind backing your bank deposits, has a Money Smart program, provides for free financial education curricula designed to enhance financial skills and create positive banking relationships. Essential, the cornerstone of this channel is to help you master relationship banking and maximize your borrowing capacity. There's a reason for that. The FDIC provides a free educational program around financial literacy to help you do those things. MyMoney.gov, this website from the Financial Literacy and Education Commission compiles financial education information and resources from across the federal government, covering topics like budgeting, saving, investing, and more. Many of you probably had no idea about these. So I hope you took notes and doing your research on those, because those are free and they're coming from one of the best sources that it can come from, which is the federal government and government agencies. You may or may not believe that to be the case, but it is a really good place because they're the ones setting the regulations, the rules, the laws of how money is going to work, how finances are going to work. So if they're giving you the information, there's some substance to be had there. It doesn't mean every single thing there is right, but it's a good place to start. The next place that I'm going to recommend for you to go to develop your financial literacy in person, you can find this information online as well with some of the larger entities I'm about to discuss, but it's going to be an obvious, blatant favorite for me, which is going to be your banking institution. Why? Because banks, first off, if you have a banking relationship there, you're already in the ecosystem. So why not maximize the resources they have available for you, likely for free in this category? Next, banks are going to be incentivized to provide you with literacy because you're going to use their products better and they're going to have a much better client relationship from you if you understand your money and navigating it effectively. Banks want healthy clients. This is horribly retarded myth out that banks want you poor and they want to rob you and they want you to pay all this interest and default on all your debt. It's the most retarded thing that I've heard, because literally the foundation of a bank's financial success for themselves, their balance sheet, is how healthy and successful their clientele base is. Stuff like, the deposits they have on hand. Stuff like, how many accounts are closing and churn off, how much fraud they're experiencing, what loans they have on the book, and the ratio of defaults on those loans. If these ratios and statistics are bad, banks are in bad shape. So they're incentivized to make sure that you have a reasonable base of financial literacy. Now, they may not empower you to be a top 1%er, but they're going to give you the information you need to be at least stable because it works for their books. But anyway, I digress. Yes, many banks offer a variety of financial literacy and education programs for different audiences. These programs might include workshops and seminars, which a lot of institutions aren't taking advantage of, covering topics like budgeting, credit building, managing debt, home ownership, and retirement planning. Online courses and resources, providing accessible learning platforms that cater to various learning styles and schedules, like Wells Fargo's hands-on banking program. Many of you may not have heard of that and may bank with Wells Fargo. Programs for specific groups, tailored programs for youth, seniors, small business owners, and those transitioning into adulthood, specific financial situations like veterans. Partnerships with community organizations, absolutely. Collaborations with schools, nonprofits, government agencies to extend their reach and impact, such as HSBCs, partnerships with junior achievements worldwide. One-on-one consulting and coaching, absolutely, banks offer this. Some banks offer personalized guidance to help individuals achieve their financial goals. Most cases, it's the bankers right there in the branch. Not every single one's going to be the brightest on in the box or the brightest light bulb that in the fixture. But at the end of the day, the institution themselves probably has somebody that is, gifted and talented and is willing to help you and will do so pro bono based on your relationship with them. The motivation behind banks offering financial literacy programs is multifaceted. It allows them to foster deeper customer relationships and build trust by helping customers make informed financial decisions. Support the financial well-being of communities they serve by providing access to valuable financial knowledge and tools. Address the needs for financial education, as studies show that many individuals struggle with financial literacy and decision making. Potentially enhance customer loyalty and retention, an obvious one. Customers who feel supported in their financial journey may be more likely to stay with their bank and explore other products and services. Hands down, no question. Potentially enhance, comply with regulatory expectations such as those related to Community Reinvestment Act. In some cases, activities that promote financial capability for low and moderate income individuals may qualify for consideration under this act. So this basically means that banks are also going to be following laws and regulations to educate you. If the community that the branch is in has a law in place that requires them to invest in that community, within reasonable proportion. So that basically means if you are setting up a branch in that community, you have to cater to the needs of that community, at least on some level. That almost always includes financial education and financial literacy programs and resources. Your bank is a gold mine for you to start in. And it's a best place as well, because that's where your money's funneling through. That is where your money is. What better place to go get a financial education than the place the money's running through in the first place? So I hope you exercise these different resources and check into them so you can double down on what you're going to get from this live stream and what you get from this channel, and plug in as many credible quality resources as you to enhance your financial literacy and education. So we're about to get into some strategy next. Do you consider that you, as an American citizen, have a high purchasing power? I don't understand that question, but if you want to reiterate it for me, I'll be willing to ask that or answer that and go over it for you. All right. So, where to start? Where is your money right now is important. You have to take inventory on your financial journey right now, like where you are right now. That is the number one start for you in particular on this live stream. Where are your income? Where's your expense? Where's your debt? Where's your savings? Do you have investments? Where are they? What is your living situation and expenses around that? Are you renting? Do you own right now? You need to take what insurances do you have or do not have? You need to take a full inventory of your current financial situation if you want to be serious about this and get the max out of this. Literally, key essential is taking inventory. Your credit score, where is it right now? Your credit profile, where is it right now? You need to take inventory of where you are right now. Hands down, no way around it. The next thing that you need to do once you assess that is go back to the fundamentals of what makes everything else in your financial journey work, which is your basic budget, income and outflows. You need to take inventory and do a serious check. Do I actually take home? What is my full compensation package? And what are my expenses? Starting there is going to funnel all the way up to those higher level goals, like building great credit, getting funding for a business, maximizing access to credit cards and using those effectively, if that's an ambition of yours, investing effectively, owning a home or owning multiple properties, if that's a goal for you. Whatever your financial goals are, it's all gonna zero right back down on a granular level to your income and your expenses, your inflows and outflows. Everything else is irrelevant. So you want to take full inventory on your income. And that does not just mean what you gross. That's one metric you want to know. The next metric, again, your full compensation. Many of you work for really reasonable employers that are offering more than just your pay. There's other benefits, there's perks. Are you taking advantage of those things? Your retirement account contributions, all of the different things that come with, all of the paid time off that you have. et cetera, et cetera. You know what benefits you have at your job, or you should know. Discounts on various services and benefits you may have. You work for a decent sized employer, they have a lot of employee friendly and employee retention benefits and discounts available. Are you taking advantage of those? That's all part of your compensation. Then you need to get to your take home pay. That is essential. You also need to consider in this your taxes. That's correct. Something else almost nobody talks about when they talk about financial literacy and taking inventory on your personal finances. Where's your tax situation at right now? How much are you paying in taxes? What is your, how is your tax set up with your income? Meaning, are you claiming and filing, no dependents? Are you the maximum amount of your check for taxes? Are you withholding a lot? You need to evaluate the entire spectrum of your income, because this is the only way to truly know where all of your compensation, not just your inflows or your pay, but your full compensation is going. So assess your taxes as well. Once you get down to the brass tacks of your income and your expenses, you need to take inventory on the expense side, meaning what are my true essential expenses that I cannot go without? That is essential. Where is this? Understanding this, one of my favorite content creators, and I also had the luxury of having her on the channel, is, Miss Rich Auntie Status, Autumn, on the channel, Rich Auntie Status. One of the things she does great, and she does videos multiple times a month. One of the best things she does is has a literal spreadsheet tracking every penny of her expenses, along with her income and her overall net worth. Why am I bringing this up? Because this is the only way to be able to get your money to start working effectively for you to reach some of these higher financial goals. So she has a zero-based budgeting strategy she's following, meaning every single dollar is accounted for and tasked an assignment. That is the type of philosophy you need to have around your money. What that basically means is I'm not in the dark or completely blindsided by my budget, my income and my outflows. I shouldn't be going into my checking account when I go in and trying to figure out why I'm in the negative. I shouldn't be going into my checking account trying to figure out where all my money went. I shouldn't be getting paid on Friday and completely broke on Saturday and can't tell you where half of the money is gone. That's the kind of accountability you need to have with your finances. So full inventory on your full compensation, not just your income, and your full expense ratio. My essentials, my disposable and discretionary income, everything. I need to know where all of it is going to the best of my ability. Once you get that in order, which probably if you haven't already been tracking it, will take you time. You're going to have to thumb through bank statements. You're going to have to go through, transaction histories. You're going to have to go through pay stubs. It sounds gruesome. I understand that. But if you're serious, for those of you who are serious, it's necessary. Because if you're not going to do it, who is? And what better yet, an answer to that question, if you're not going to do it, when you do task somebody else to do it, when will that happen? When you apply for a credit card, when you apply for an auto loan, when you apply for a mortgage, when you apply for these different things, these higher level goals, they're going to take inventory of your income and expenses for you. And it's not going to be pretty, because when they get through thumbing through everything, you get that big fat denial and you're trying to figure out why. That's going to be when it's going to ring a bell for you. Then the light bulbs are going to go off, or some of you are going to shut down financially and give up. But for those of you, my pioneers watching this channel, my new viewers that are watching this channel that have some real grit and are determined to make it financially, that's when the light bulb is going to go off. Oh, I need business funding. I got this idea or this existing business structure and I'm tired of working it through cash. I need access to business capital. Guess what's going to end up happening? They're going to take full inventory of your income and expenses for you. If you're not doing it, they're going to do it. And you're going to find out really quickly that your income and expenses don't balance out well. How are you going to find out? They're going to say, no, please get out of my office. And you're going to get that. They're not even going to give you that. They're going to hold your application up and send you the letter in the mail. They're not even going to call you back. Or you're going to get it when you apply for a mortgage, or at least try to get pre-approved. Or you're going to get it when you go apply for that car loan. And they might approve you because they'll give anybody with a pulse a car loan, but you're going to be paying a mortgage for a car. Same thing when you go to apply for credit cards. The list goes on. As soon as you go to tamper with anybody else's money, they're going to double back and try to see how you've been managing your money. So that's why you need to go through the necessary steps to take inventory of your income and your expenses. The next thing after that, once you've done that, debt management should be the next thing on the agenda, generally speaking, because that's the number one area you could be bleeding dry, is going to be around what debt you're carrying. There's a lot of argument about good debt and bad debt. I've used the verbiage of good debt and bad debt on this channel. In essence, all debt is really a negative, to be honest. But some debt is extremely productive. There's a difference. Some debt is extremely productive. And that's what we want to decipher in our debt management section. What debts do I have? Do I have payday loan debt, cash advance title loan debt? Do I have credit card debt? Do I have personal loan debt? Do I have car loan debt, student loan debt, mortgage debt? What type of debt do I have? What is it costing me in my cash flow? What is it costing me in interest? And is it being productive? If I have payday loan debt, might have got you out of a bind in short term, but it's probably not working out so hot for you after that. If I have student loan debt, maybe we're on to something. Maybe I went and got a very respectable degree and it got me into a very respectable career that ultimately is going to get me to a good place financially down the line. Maybe up for grabs. That doesn't mean that it doesn't need to be tackled, but it could be ranked as a productive debt. Now, if you went to school and got some kind of liberal arts degree or some kind of basic business administration degree, and all of that ended up landing you at some fast food chain or some, you know what I'm saying? Like, and no disrespect to people that work fast food, but I'm just saying, you went through all that school to end up working an entry-level job. That's a different conversation. But how productive is the debt? How much is it costing me in my cash flow? What is it costing me in interest? And setting up a to-do list on eliminating debt based on the most unproductive and expensive debt all the way up to the most productive and low-cost debt. That is a reasonable way to look at that. If I have payday loans or credit card debt or personal loan debt that was around something totally unproductive, and all of those I just named likely have high interest rates, that's going to go towards the top of my list of what needs to be attended to. If I have negative debt that's on my credit report that I have defaulted on, I haven't paid in a while, that's even more important, because not only is it costing me in my cash flow, but it's completely hindering my financial reputation. So that's a whole nother conversation. So all the way up to mortgage debt on a rental property, there's a good chance, depending on what's going on with that, I am in no rush to pay that off, unless I'm just trying to, balance my portfolio out and get to a point where, I'm debt free and everything's cash flowing. That's like the higher level of rental real estate investment. But if I'm in the early to mid stage of my journey, I'm not even tripping about debt on my rental property. Debt to fund my business, strategic, smart, affordable debt to run my business. Probably not too concerned about that if my business is generating income from that debt. How productive or unproductive the debt is, how expensive the debt is, what is it holding me back from, or what is it helping me get to? That is debt management, a general framework. Okay. So that's the next thing after we get to where I am right now, what my income and expenses and full compensation and full expense breakdown is. Debt management. What debts do I have? What is it costing me? Is it productive? Did it get me somewhere productive? Is it getting me somewhere productive? Is it unproductive? Is it not serving me? That's how we're going to look at that. The next thing is going to be setting useful and fruitful goals. Once you've gotten to this, where I'm at, my current income expenses scenario, my debt management, what debt I have, I've taken inventory of my debt. That is a good place to start looking at goals. All right, I have a really good glimpse of my financial picture. What are my goals financially? What am I even trying to do? Why the hell am I even out here? Like, why am I even out here working in the first place, bringing in money, spending money? What am I out here doing? I'm not just existing. What am I looking to accomplish? What's going to make this whole life thing and this working through life thing worth it in the first place? Setting useful and fruitful goals. So what are your financial objectives? Is it building a massive savings account? Is it debt freedom? Is it, building a strong retirement account? Is it paying off my home and owning my home free and clear? Is it owning rental property? Is it starting and launching a successful business? Is it, a dividend stock portfolio that's going to pay for my lifestyle? I want to, is it leaving a country and being able to live in another country, and you got, your dividend stock portfolio or your rental portfolio in the United States and you live in Thailand somewhere? What are your financial goals? You want to live off the land somewhere? Like, what are you trying to accomplish? Why are you even out here other than just paying to live? That's when you start setting that up and start selecting and laying out a picture for what your life looks like. Generational wealth, being able to, give my kids a great financial start, retiring your spouse, retiring your loved one, retiring your parents. What are you out here for? What are your goals? This is a good time to take inventory of that and start like putting that in front of your face on a regular basis. Because once you have a real strong picture of your finances and your debt and your income and your saving capacity, etc., this all, of course, includes your bank relationships, etc., like inventory. I haven't really said that up to this point. In the midst of finding out where you are now, your income, your debt management, where's my banking relationships? Who am I banking with? What can they provide me? What resources are available there? Setting your goals up from that point on. Now you need to track your finances, and that includes budgeting, that includes credit, that includes all progress, that includes my income, my pay increases, that includes expense changes, that includes life events that may change my finances over time. Taking in family members, having kids, parents retiring, getting older and need you to take care of them, whatever is going on in your life. This is all a part of tracking your finances, because all of that requires money. The economic system, is inflation getting worse? Am I paying more for gas, goods, services, groceries? All of it sounds like a lot. It sounds like a lot. I get it, but this is necessary. If you're serious, this is stuff you have to keep up with. So what does tracking my expenses look like? What does tracking my credit, tracking my budget? This basically means I am checking my bank accounts and checking my credit score and credit report. Personally, in my case, pretty much every day. The main bank accounts where my actual inflows and outflows are going into, I'm checking every day, sometimes multiple times a day. There are accounts that I may just be saving separately in, but there's not really any expenses coming out of. I check a couple times a week. My credit report may sound crazy. I check every day my credit score and credit report, at least on one or more platforms. I don't give a damn about paying for subscriptions on my credit, my credit monitoring. A lot of people I know will skimp on that kind of stuff. They only want to deal with the Credit Karmas and whatever their bank might provide them. And that's okay. That's a decent starting point. But when you really want to get into the weeds and check the highest levels of your credit score and report any changes, any data, My FICO, Experian, places where you can get all three of your FICO scores. It's updating on a weekly basis. Anything live that's happening is reporting it to you. You're paying $20, $30, $40 a month for it, but God damn it, it's worth it. That peace of mind of knowing exactly what's on your financial reputation for $1 or $2 a day is a no-brainer, because not knowing what's on your credit report is costing you thousands, tens of thousands, hundreds of thousands, and even more importantly, it's costing you years of your life and what you aren't accomplishing financially, how far behind you are financially. If something's bad is on your credit, it can stay on there 7+ years, depending on what it is. And if it's unattended, you can end up fumbling around and finding out about it later and then reset the clock for 7 years. It could have been on there for 2 or 3 years already, and you interacted with it in a way by contacting the creditor or paying on it or whatever the case may be, and re-triggering the clock of how long it can stay on your credit report. You need to monitor these things very consistently. Those of you that are into health and wellness, you already know calorie tracking, pound tracking, step tracking, gym visit tracking. You're doing these things daily, because that daily measurement, you cannot manage what is not measured. You will hear other smart people say that. I cannot manage what is not measured. I cannot manage something for improvement if I'm not measuring it. So you have to look at your budget, your bank accounts, your credit reports. You have to monitor these things consistently. Your pay stubs. Are my taxes changing? You may have a city, state, federal tax change that you're not even paying attention to that's affecting your money. Like, what if taxes have gone up? What if Social Security deductions have gone up? Like, what if your medical insurance has gone up or changed? These are things that could be hitting you for tens or even potentially hundreds of dollars a month or a pay period that could be impacting your finances. That money could be going into your investments, could be going into your savings account. So tracking is essential. It is absolutely essential. As important as it is to take inventory on where you are, tracking going forward is essential. Next, saving money. Yes, we're there. At this point in time, if you're keeping up with all of this, saving money is going to be essential. So what that basically means is once we've gotten go over everything else that I've covered, we need to get to a point where we're able to save money. What does that look like foundationally? The basics is that I need more inflow, than outflow. I need more money coming in than is going out. Essential. I need to have a spread on my compensation, including my income, versus my expenses. Why do I keep bringing up compensation? Because many of you, again, part of your saving and / investing could be taking advantage of the extra money, the contributions or discounts your job may have available for you in your benefits package or your part of your compensation package. Examples of this can be retirement accounts, employee stock purchase plans. Many of you work for really decent sized companies, Fortune 100 companies, etc., that have ESPPs, employee stock purchase plans. That you could be buying their stock at a discount. I work for a very significant size financial institution that is highly likely going to be a successful financial institution for years to come. They offer us a 15% discount in our ESPP, meaning I can buy their shares of stock at a 15% discount. So as the stock that means at some point down the line, when I build up in that account, I have a natural portion of profit, not including only the profit of me buying the stock at one number and it growing to other years later, but I'm already buying it at a 15% discount. So at some point in time, this is a financial enhancement for me. This is a form of saving and investing for me. So stuff like that, along with discounts on, your cell phone bill, anything else that you could think of that is a mainstream expense that you can have. Cell phone is a really common one. Companies will have plans with 10, 15, 20, 25% discount on cell phones. Could be the same thing to go buy a car. There could be discounts on you buying a car. So you need to pay attention to your full compensation plan. There's literally money hidden inside of there. I promise you, for a decent sized company, there's something else there that you're probably not paying attention to. So saving money includes your full compensation. You need a spread from your income to your outflows. You need to set up a plan where you're saving some portion of that money. I am a huge advocate, and I am somebody who's a big proponent for calling people out for over saving. So I am not encouraging you to be the person that is walking around with, hundreds of thousands of dollars built up in a basic savings account or even a high yield savings account, unless your financial picture dictates that to make sense. So what I'm saying is save responsibly, save in the right places, but save respectfully. Meaning at some point, once I have a decent emergency fund, once I have a decent cash cushion for my financial ventures, if you're looking to start a business or get into real estate investing, you might want a certain reserve or cash cushion for that kind of stuff. If you're going to buy rental properties, they want to see that you have reserves on the rent that the properties go, or the mortgage rather, and expenses that the property is going to dictate. Of course, you're planning to rent it out and have that covered by the tenant. But the lender's looking and saying, look, if you don't have a tenant for 3 months, 6 months, 9 months, what's the plan? So you need reserves for that kind of stuff. So outside of your general emergency fund, you might want to have money saved in another cash account. What else can serve for reserves? Retirement accounts, 401ks, IRAs, brokerage accounts. These things all count as reserves. So you want to fill these up to a reasonable portion, especially cash savings. You do not want to oversave in cash, but you do want to have some cash available to not put yourself in a bad financial bind unnecessarily. Okay, so a respectable savings goal. Cash, 3 to 6 months expenses is a pretty good rule of thumb for many people. And beyond that, you want to save in your retirement accounts, investment accounts, high yield savings accounts, and CDs, or money market accounts can be respectable places as well. I've done a video on saving and savings strategies, etc. I've done either a live stream or a full video not that long ago. So just go back in the catalog a little bit and dive into that. I really break down what a savings account is, the different types, what CDs are, what money markets are, what various savings mechanisms are available. Okay. So go back and check that live stream or that video out. Saving money is essential. That is your next step. When and how to invest. This is a big one. I'm going to try to keep this one concise as well. But when and how to invest is essential. When and how to invest looks like every other step I laid out before this, being in great shape, because if your debt is bad, you don't know your income and outflows, etc., it's not time to invest. How to invest. That aspect of it is going to be covering, should I be investing in my retirement accounts? How much should I invest in my retirement accounts? When should I start investing autonomously on my own in the stock market? Should I be investing in the stock market? Should I invest in real estate? How should I invest in real estate? Should I buy people's businesses? Should I be a private money lender? There's all kind of ways in this economic system we're in to invest. There's a ton of options to do so, a ton. Where you are financially, you need to pick out, how do I set the framework and when and how to invest? I'm going to give you some information to help you do basically what we in a financially professional world call suitability. Going over your full financial picture, taking a canvassing of your lifestyle and your life circumstances. So what does that mean? Full financial picture, full income circumstances, properly insured, family circumstances, family stability, financial goals for yourself, financial goal for family, how fast you're trying to get there, how much risk tolerance, how comfortable you are with various investment vehicles and strategies. Are you the kind of person that can invest your money and, watch it nosedive 10, 20%, in your app when you log in the morning and be okay with that and not stomach not turn? Are you the kind of person that's going to wake up and see that red line or that red chart going down, panic and sell everything and try to take what money you can salvage out of it? Knowing your risk level is important. Knowing your age and your timeline to retirement or your timeline to your financial goal is going to help you pick not only when to invest, but what vehicle to invest in. You don't need to be a bond investor if you're trying to make up for lost time on retirement and you're, middle age. You're like, you know what I mean? Like, I'm 40 something. I'm trying to retire at 55 or 60 and I have nothing saved and nothing invested. You don't need to be getting into bonds, my guy or my girl. You don't need to be getting into bonds. That's probably not going to be a good place for you to go. So understanding your financial goals, where you are right now, what your financial situation, what your lifestyle circumstances may be, do I need more liquidity than most people? Why might I need more liquidity? I might be taking care of elderly parents. I might be taking care of my kids in a certain kind of way. I might have any financial circumstances that may require me to have to put out a lump sum of money at a given time. So I'm not going to plunge into an investment that is illiquid. Like real estate is a good example. Real estate is not easy and overnight to get money out of. You have to sell or borrow the money back out of the real estate. That's not the best scenario to be in a dire situation where you may need cash. So that's going to dictate what you invest in and how you invest. So when to invest and how to invest are the next steps. Structuring your financial literacy and understanding how to build that framework for yourself, that financial education around how and when to invest. All right. Setting investment goals and picking a strategy that piggybacks off of when and how to invest. What are the goals once I invest? And what strategy is going to help me get there? So, how hands-on or hands-off do I want to be? What kind of returns am I looking for? My risk tolerance, the economic environment that we're in, my financial position, my age, all of that's in a big old pot. My skill set, my knowledge base, what am I already familiar with? What am I already smart about? What am I already knowledgeable or comfortable with? kind of familiar with stocks. I love my retirement plan. I want to just stick to maxing out my 401k and becoming a millionaire there. You know, I want to own, I want to house hack my way to wealth and do that for years to come. I'm comfortable with that strategy. I want to own rental property. I want to invest in other people's businesses. I don't want to do my own business, but I want to invest in other people's businesses. You know, I want to be a private money lender. I don't want to invest in real estate, but I want to give other people the money to invest in real estate and get a fixed return back, a predictable return. So many different ways to go about this. Understanding and developing the financial literacy and education to help you know how to determine these strategies, or even better, how to have enough financial literacy and education to connect with the right professionals who can guide you through this process. You need to have financial literacy and education just to get help. Because if you don't have good financial literacy and education, you won't know how to pick a good financial professional to guide you in the process. That's why a lot of y'all end up getting scammed. And they may not be y'all as in you particularly, but a lot of individuals and people out here get scammed so horribly to invest with people and buy people's courses and programs, and they don't know how to pick and vet the legitimate ones from the illegitimate ones. You don't know how to do that because you don't have financial literacy. You don't have a financial education. So you're trying to go out here and put the cart before the horse and get rich and get wealthy. And then you go, I guess, I don't know what was the plan, to go back and get the financial literacy and education. It doesn't work that way. You have to understand money and have some fundamental understanding about things before you invest in them or before you pour your money into them. So you need financial education just to get financial assistance. It's crazy, but that's the truth. Next. I put these towards the back burner because everything prior to this point is what's going to help you lay the foundation to these last that I'm about to cover. So that's going to be when to start a business, and the framework financial literacy and financial education around starting a business and keeping a healthy business going from a financial point of view, and buying a home or your next home. If you are, just to recap, if you're developing your financial literacy around where to start, where you are financially, your income and expenses financially, total compensation, debt management, setting financial goals, fruitful goals, tracking your finances properly, saving money, knowing when and how to invest, setting investment goals and picking a strategy, this is where you start to get to this level of stability and management and getting a grip on things where you can now start talking about going out and starting a business, or talk about going out and buying a home or buying investment properties. This is when you're at that stage. Believe it or not, a lot of people are looking to start a business before they do even the first step that I laid out. Before they even take inventory of their finances and see where they are currently, they're trying to start it. I see it all day long because I work as a business banker at my financial institution. That's one of my many hats of a banker that I wear. So I see people come in and they set appointments, or they come in and do business bank accounts, and they got these notes talking about starting, launching my business, about to do this. Me and my partner's about to get into all of this, that, and the third, because everybody want to sound cool and sexy and like they just doing stuff in the world. And I'm going to do my evaluation and due diligence on who this person is. So a lot of times they have existing personal banking relationships. Oh, good. Let's take a look and see where you are. So you talking about starting a business. I log into I take a quick brief through your personal banking relationship. You're over the limit of your credit card. Your bank accounts are overdrawn. You got, no money in your savings account. You don't have a savings. Like, your personal finances are a mess. But you're about to try to waste my time for whatever period of time talking about starting a business account. This is insanity. Please get out. Like, security, come get this jackass. Like, what are you doing? So before you start a business, and honestly, ideally, before you buy a home, you need to have the rest of this, at least financial literacy, in place around these things. You may not have all of these things checked off at their supreme level, but you need to have a good financial base of education, literacy, and structure around the steps I've given you prior to starting a business or buying a home. Because if you have them in place and have a reasonable financial literacy, your success rate at acquiring the resources, like the funding to start the business, or getting the business bank account set up and sustaining it, or buying a home and getting the resources necessary to buy a home and qualifying at the highest level, maximum home amount, best rates and terms, access to all of the different funding programs to help with down payments or get your seller credit, all of that fancy stuff. All of that's going to come when you're in the best financial shape possible. The system is going to reward you. That includes what I talked about way earlier, the tax aspect of it. Starting a business, buying a home, you can maximize your tax benefits once you get into these brackets of being a business owner and a homeowner and a property owner. But you need to optimize your financial strategy, including your taxes, prior to that point. If you haven't optimized your taxes, then you could be getting the benefits or the partial benefits of home ownership or starting a business and actually running a business, but you're bleeding out from some other aspect of your poor tax strategy and poor tax planning. So all of this is strategic, and the steps that I've laid out for you, they're not just in some random order. You really shouldn't be talking about starting a business or buying a home until you've checked everything else that I've covered for you. So I'm going to digress from here and see if anybody that is currently on the live stream has any questions really quickly. Those of you who stuck the replay out to this point in time and got all of this value, you comment down below and let me know what you think about the steps I laid out. Any questions, feedback, or reinforcement maybe on, any of these things that I covered and where you are with them, please comment it down below. And I'm going to digress in case anybody's on the live stream that may have any questions at the moment. I don't see anything substantive on there at the moment. But just to wrap this up, as I'm waiting for these last touches on anybody to come in, to all my pioneers, welcome back. To my new viewers, welcome in. I hope each and every one of you were able to get some of the value, the ton of value and gems that this live stream provided. And it gave you some framework around your existing financial plan or added value if you're already on track. If you're starting from scratch, comment down below and let me know you have been and what you learned from this. What questions you have, clarity I can provide. Other than that, I want you to like, comment, share, subscribe, support the channel so the channel can continue to support you. I want you to get in the description section, tie in with me on Instagram. I'm slowly but surely building out my content and building out the community and the committee for my Pioneer Instagram. There's a link in the description down below, or there will be a link at some point in the description down below for you to connect with me one-to-one on a consistent, ongoing basis if you're interested in that, where I can provide this value for around your personal situation and walk you through this path. But other than that, I enjoy shooting this live stream and providing information for you guys as I always do. I don't see any questions coming in right now from the live stream. It doesn't seem like too many hung in on this one towards the end. If you caught the replay, I want to salute you for taking this time to invest in yourself to this point. But as always, I want each and every one of you to stay focused, stay in motion. I'll see y'all soon.